afternoon, everyone. I'm Brett Scott. I work generally in alternative finance and some forms of financial reform. And it's my pleasure today to try and moderate this panel on financial inclusion. Interestingly enough, the last time I was in this particular building was 2 years ago. Had a very different scenario. It was with a lot of mercenaries from the former Republic of Rhodesia, which is one of these failed colonial states that got rightfully overthrown, which became Zimbabwe, and which my dad was one of the ex-special forces. It was an interesting scene because a lot of those guys who were part of that were now effectively mercenaries in various failed states around Africa as well. So strangely connected to financial inclusion, albeit in a slightly different way. But that's another story. This financial inclusion is a very, I guess, a divided topic, and there's quite a lot of ideological differences about how you attempt to achieve financial inclusion. And some of the key narratives that we see coming out is, on the one hand, financial inclusion is supposedly about a lack of infrastructure, and that the way you're going to try and deal with financial inclusion is to build this infrastructure in some way. On the other hand, we have a separate narrative, which is that financial or exclusion, should we say, is due to a lack of profitability, and the fact that certain communities just don't generate enough profit for companies, so they get ignored. And I guess you get different narratives coming about this, about how you then solve this. So part of what we might see today is that these market narratives, which are, if you can build the infrastructure and the technology, you can make it more profitable to do business in these places, and therefore you'll have the development of financial inclusion. On the other hand, there's a completely separate narrative that you find in other scenarios. Actually, me and Charlene were at the UN recently on a panel about social and solidarity finance, which is looking at how do you build financial systems that are not entirely based upon profit and actually seek to take in other forms of considerations. And so there's a completely different line there. And I guess the real question is, how do you balance these types of things? And then there's a sort of a third element to this, which is not really spoken about in the scene, is that in places like the UK, the banking sector is often seen as quite a predatory institution. So is financial inclusion about giving people the right to be exploited, which they not currently have the right to be exploited? Is that just a trite thing for me to say? Is financial inclusion a kind of a thing on the heads of Western elites, a way to extract more money, a form of neo-colonialism? So we can discuss these things. First up we have Charlene Chen from BitPesa. And Charlene, she told me she was previously part of Deloitte as a consultant, I believe, and then decided to pack it up and head to Kenya and embark on an exploration of social enterprise and ICT for D, or information and communication technology for development. So Charlene, would you maybe give us 5 minutes on BitPesa and your journey and your sort of general thoughts about financial inclusion and exclusion?
Sure. Thanks so much, Brett. It's great to see you not only in Geneva but here in London. So my name is Charlene Chen. I'm the Chief Operating Officer of an early-stage fintech company called BitPesa, which is headquartered in Nairobi, and then I run the office here in London, covering Greater Europe. So what BitPesa is an online platform that allows anyone in the world who has access to Bitcoin to send money to any mobile phone in Kenya and Tanzania. So former governor gave a great overview of the power of M-Pesa in Kenya, and really what BitPesa hopes to do is show how Bitcoin can do for the world what M-Pesa has done for Kenya. So essentially, if an individual, so say an African diaspora who's living and working in the UK or the US or anywhere in the world where there's access to purchase Bitcoin with their local currency, can buy Bitcoin with, say, British pounds or euros, US dollars, go onto our platform, say, I'd like to send to Brett, this is his mobile phone number, and within minutes, BitPesa converts the Bitcoin into local African currency. So this shows up within minutes as Kenyan shillings or Tanzanian shillings in a mobile phone. So what our goal is to dramatically lower the cost of remittances and business payments to sub-Saharan Africa. So although we are currently only operating in Kenya and Tanzania, we have great ambitions to expand across the continent. So what we're looking at is essentially lowering the cost by 50 to 75% compared to Western Union or MoneyGram. And we believe this is really pertinent to financial inclusion, because the more that we can get remittances, which we've just spoken about being blocked to places like Somalia, this really improves the inbound flow. So it's driving more economic growth in each of the countries where there are higher amounts of remittances, because what we see this money going to do is not just helping to support friends and families with day-to-day living expenses, but it's also going to be, it's used to invest in local businesses in Kenya and Tanzania. So we're seeing that the money that's being processed through BitPesa is actually going to power small, medium enterprises. It's enabling diaspora to invest in land, property, their families' businesses. So, I also wanted to bring up the element that remittances are not just used for food and clothing and kind of survival expenses, but really to power the local economy. So that's what we're really excited to see. I mean, some of the applications we've seen are micro-lending. So I've seen a lot of failures in the microfinance industry in Kenya during my 5 years of living there. And so we're seeing that now BitPesa is able to power peer-to-peer lending. So kind of like a Kiva or Give Directly model, where funds are sourced abroad and are able to be channeled quite efficiently and cost-effectively to sub-Saharan Africa. So I'd be happy to take any questions later in the discussion.
Can you maybe just quickly just give us just a quick step-by-step background infrastructure of how BitPesa actually works? If you're a systems architect, what exactly does it do? Like, how have you designed it?
Sure. Well, not to get too much into the infrastructure.
So we can let's visualize the user experience for somebody. Like, how would I experience this thing as I'm going through it?
Yeah, sure. So let's assume that I'm here in the UK, which I am, and I need to, say, pay my staff in Kenya. So essentially, let's just say that all of BitPesa's funds happen to be in the UK, which they're not. But let's say I would use my British pounds. I would purchase Bitcoin from an online exchange. So that could be something like Bitstamp, or it could be a local exchange like CryptoPay. So I would purchase those Bitcoins, and then instead of waiting and kind of holding on to the Bitcoin, which we're not proposing any of our customers to do, I would immediately log on to our site, bitpesa.co, and then indicate in my address book, one by one, all of the names and phone numbers of my staff in Kenya. So, Amy, this is her cell phone number. Elizabeth, this is her cell phone number. Bob, this is his cell phone number. And then basically, BitPesa's system gives a quote. So let's just say I was sending 2,000 pounds worth of Bitcoin to Kenya. It would say, okay, Charlene, you need to send X number of Bitcoin. So yes, I could have Bitcoin on my cell phone, and I do, but for a large amount of Bitcoin, I would recommend using an online wallet. And so I would basically transfer the Bitcoin to BitPesa, and then within minutes, all of these funds in Kenyan shillings would be deposited in each of my staff's cell phones. Now, as the former governor said, mobile money, you might be thinking, oh, well, how is that useful? Okay, now my salary's on my cell phone. What can I do with that? But in the case in Kenya, so while I was living in Nairobi, I would drive my car to the petrol station and use M-Pesa to pay for my gas. Every month, I paid my utility bills, so electricity bills, with my M-Pesa. Go to a restaurant, oops, out of cash. Haven't been to the ATM recently because, by the way, Kenyan banks charge you every single time you withdraw from an ATM. Let me use M-Pesa. So actually, what mobile money in Kenya has proven is that you can actually get pretty close to a cashless society. Now, of course, some people may not want to keep their funds on their cell phone, but what they could do is go to one of the 80,000 M-Pesa agents across Kenya, and not just in the cities like Nairobi and Naivasha, but I've been to the furthest corners of rural Kenya, and there are literally M-Pesa agents, multiple ones on every single street. So I could convert that into Kenyan shillings if I did want cash. Does that help?
Okay, cool, thank you. Now we're going to move on to Juan Llanos. I've only just recently met Juan, but by all accounts, he is a global expert upon financial compliance, anti-money laundering, anti-terrorist financing, as in hot demand in all these fields. Was also previously part of Bitreserve. And Juan was sort of, in the brief discussion we had, was suggesting that perhaps this field of financial inclusion, obviously it's not merely about remittances. There's a lot of other things we're talking about that could be involved in it, and particularly you touched a little bit perhaps on Hernando de Soto's ideas. So maybe you'd like to elaborate on that for 5 minutes.
Yeah, thank you. Well, my background is in remittances. Also, I started working in the US in 2002 as a compliance officer in a small ethnic money transfer company. I started to see, first of all, the immediate social impact of the service on people, both on the send side and on the receive side, right? It's an untapped market, an unserviced market, so it needs to be, and they shun banks. They understand the banks are very aggressive with fees. They cannot afford to have bank accounts. They sometimes don't get paid they get paid in checks or in cash, and so it's a service that is really a need. And we started trying to innovate, of course, trying to cut down costs and trying to circumvent the major expensive channels like MoneyGram and Western Union that are available massively in the United States. But I immediately started to see all of the obstacles, and oddly enough, with the area that would become my area of expertise, anti-money laundering and regulatory compliance, I realized what Constance just said very eloquently a few minutes ago, that it's one of the primary compliance, and this attempt or this goal of preventing money laundering and preventing the financing of terrorism really has the unintended consequence of excluding many people who lack identities from the financial system. So that's why but anyway, think about the historical situation. It was just 1 month after the enactment of the USA Patriot Act, 3 months after the 9/11 attacks. So 2002 was a moment where everyone was scared about the future, and the anti-terrorist rules became very strong back then, and they still are today. So I noticed that there was this paradox that we were trying to help an underserviced community, but then we had to impose controls that were preventing us from doing that, right? So I started writing a blog in 2012 called Contrarian Compliance. I wanted to try to find ways to comply with the law while also trying to help people facilitate the transfer of value. So, but then of course Bitcoin came in, and I started writing about becoming the sort of a informal advisor to the Bitcoin community about all of the pitfalls and hurdles they would have to overcome to install their products. So I started writing about Bitcoin and regulation. So, I think that I've been working in payments, working in remittances, trying to create retail financial services for the underbanked for the last 14 years. And early on in that, the founder of that company, a Dominican, very well-intended Dominican individual, gave me a copy of The Mystery of Capital. That was mid-2002. I had no idea who Hernando de Soto was. I didn't understand. I was just getting into that business for the first time. So I imagine coming from Argentina, I had some understanding of our life with money or with lack of money and inflation and all these things. We had lived those, but I hadn't made conscious all these issues and these topics until I was part of a financial services company and until I read that book. And that book was mind-opening, and I will summarize it, try to do my best to summarize the book in 2 minutes, but Fast forward 10 years later, 12 years later, and I get the opportunity to sit down next to my left with Hernando de Soto for 3 hours on Necker Island, by the way, in Paradise, last month. And this gentleman here is telling me firsthand about all his life work in trying to find the root cause or the root solution for eliminating poverty in a peaceful way. And he's now sitting at a table with Mike Casey, all these people that had been gathered to talk about blockchain technologies. And the next morning at breakfast, so Richard Branson sits at the table, and he doesn't know that he's sitting next to Hernando de Soto. So we start having a conversation, very personal, very casual. And he asks, and I'm going to embarrass Sir Richard for the moment. He asks, "Is Hernando de Soto here?" And Hernando says to him across the table, "It's me, but don't worry, I shaved recently, so you don't recognize me." So and Richard and Sir Branson stood up and said, "My honors to you, sir. I've been reading your material for a long time, and from then on, the rest of the conference, he never stopped talking to him, and this is why. And let me explain why this is so important. And I'm glad that you asked the question, and Ms. Amor answered the question about title registries. So another sort of theory is that societies have hidden value. There's a lot of systems that work today. There's a lot of value. There's a lot of money. There's a lot of commerce in an underground economy that is invisible to the rest of the world, right? It's an massive informal economy that he calculated is in the 10 trillions at the time of the publication of the book in 2000, right? So imagine there's 10 trillion of value in an underground economy that hasn't surfaced yet. And the only reason it hasn't surfaced, in his theory, is that it hasn't been recorded in a reliable system. And what Ms. Amor was describing in terms of the conflicts that arise when someone claims ownership to a piece of land or to a piece of property, and that, no, but it was me, but that would go away if there were a reliable system for registration of title, right, and ownership. And another sort of theory is that there's a lot of assets in the world, but in order for assets to really solve problems, they have to become capital. And in order for assets to become capital, they have to be securitized. They have to be able to serve as collateral for loans, right? So if you're not able to register the ownership of something, you cannot go to a bank, go to a lending institution, and ask for a loan in return for and setting something as a guarantee of payment. So, and then comes blockchain technology, this immutable, tamper-proof, transparent system to record assets. So that is the key, the most important elements in the blockchain technology. And this has nothing to do with Bitcoin as a payment mechanism, as an investment vehicle, as an asset class, as a speculative asset. It has to do with this concept of creating something that is basically indestructible and could guarantee the ownership for people, and that it will allow them to, use collateral, their property as collateral. So that is what's fascinating me right now. So, and I've been trying to find a way to reconcile my interest with financial services and payments, but I found, and I was convinced, maybe it was this unique experience of working for some time with Hernando de Soto, that there is a more fundamental problem. We would be doing band-aid solutions or implementing band-aid solutions by just focusing on payments without the underlying structure of asset creation, of capital creation through asset registration. So that is a fascinating topic, and I think that the core of the kernel of the permanent solution to the problem lies in something like that, something that would create tamper-proof registration of property. And the discussions that ensued after those 2 days were fantastic. And the stories that Hernando de Soto was telling, I hope he can be invited to the next events, is that he's very experienced in dealing with heads of state. He has advised 40 presidents, and his concept is that property needs to be independent of sovereignty. So sovereignty and nationalism is a very emotional concept that when you start tying property to sovereignty or to nationality, that is where conflicts arise. So, and everyone knows it. Everyone in power, everyone in government knows that you cannot appeal to that, or else you're going to start creating, inflaming emotions, right? So, his concept is we have to create borderless, non-national, supranational systems to record assets that could be interoperable, that could be recognized anywhere in the world, and now with the advent of the internet, and now with the advent of a value transfer and value registration and ownership mechanism, we could be witnessing the beginning of the solution to this. Because right now, so far, he has been dealing with private systems, private technology, closed systems, and it's subject to tampering. You could alter, insert a value in a database, you can corrupt the code. But imagine if you have a distributed system that is transparently available to everyone, and the moment someone tries to break it, it sounds an alarm, and there's a forced opportunity to solve it. So this is kind of a fascinating world that I think is appropriate for the discussion about financial inclusion, and it's a new world that I'm very interested in.
Can I quickly clarify something here?
Sure.
So, Hernando de Soto, you got this idea, you create, you clarify property rights, you create definable assets that can then be traded upon markets, which then upon the theory that you will then it will give people collateral to get credit and so on, which will in turn lead them out of poverty. But in a normal asset registry system, you'll have a legal system behind it to enforce people's claims upon an asset. So in a land registry, you say, my name is on this, therefore if somebody tries to take this to me, I can go to the government.
Yes.
But in a blockchain system that's sort of not connected to a state system, how do you actually enforce a claim upon a real world thing, other than simply pointing to a list somewhere saying, I claim this?
That is exact part of the challenges and discussions excellent discussions we're having at this event. And the panel on smart contracts and smart property the whole purpose of these workshops are to discover or find those solutions. One clarification, what De Soto says that he doesn't talk about trading the assets. He only talks about the registration or the representation on some record of an asset, right? And it's usually, it could be a cart for fruits or for vegetables. It could be a canoe to move down the river, or it could be a piece of property or land. So, but he's talking about moving this chain of title that exists either. He actually presented a physical chain of title, and it's if you go to my Twitter handle, there's going to be around the 25th of May, Jeff Garzik, a core developer of the Bitcoin core software, published a photo of Hernando, and we helped, some of us helping him display a 12-meter long chain of title that goes 400 years to the past. And it's actual very ancestral ways of recording ownership, which are actually knots of leather strings with knots, showing that a certain tribal chief owned this property, and then how that has been moving to internationally enforceable treaties, right? Like through the United Nations, UNICEF, and all these, whichever organization ensures the international enforcement of contracts that are tied to local legal systems. So this is what he's talking about is recording systems that already exist into an immutable database or a registry system that cannot be altered and will guarantee the real ownership of something. So So in terms of your question of about how to enforce it, it's a question of, I don't think there will be a unique solution. It's either or black or white. It has to be a hybrid system. We have to make both the old and the new, the legacy and the disruptive, the paperwork and the legacy interoperable. So this is why we are here. We're trying to bridge a gap between the past and the future. And it's a question of just putting the best minds at work and trying to find solutions to these problems.
Thank you very much. Next up, we have Amor Sexton. I haven't actually met you yet officially,
Hi,
so I'm sorry I don't have that much info. But Amor is a leading digital currency lawyer in Australia, advising companies and regulators on Bitcoin and blockchain technology and the commercialization of that technology. The floor is yours. Hopefully you can maybe touch on some of the regulatory issues, or whatever you'd like.
Yes, I guess I also have another role. I'm a global strategy advisor for IGOT, who is a Bitcoin consumer platform that's active in over 40 countries, including India, the UAE, Kenya, Australia, New Zealand, and similar to what BitPesa is doing, they have other products which include bill payment and merchant services and a Bitcoin exchange. But one of the other products is looking at how digital currency can facilitate remittance and the flow of payments across borders. And IGOT's particular strategy is to try and get local presence at either end of key remittance corridors to try and make that process as frictionless as possible for the consumer. And then as part of the work that I do with the blockchain and Bitcoin industries and in these blockchain workshops is to look at how I think a lot of the times in this industry people focus on regulations from the perspective of what it is doing to stop innovation. But I think there's also a way that you can look at how legal frameworks can facilitate innovation. For example, when we talk about how do you enforce a system of title that's based on a register, where there is actually jurisdictions in the world at the moment who have land title and property title that is based on either registration or registration as proof of that title. So it's looking at how the law can actually be used to achieve the policy aims and not just how the law is trying to stop that. And I think that the multidisciplinary approach that we've been taking, where we have entrepreneurs who have experience both in technology and in how the economy works on the ground, people who are familiar with compliance, and people who have an intimate knowledge of what the local infrastructure and the economies are like. I think that it's by getting all of us together in a room and sharing knowledge that you can actually come up with some of these the solutions to some of these issues.
Cool, nice and short. Should I ask you a question which has been interesting me for some time? In some ways, there's an interesting dynamic in the, say, smart contract community around law, which is the attempt to code law in these structures from the outset, and then sort of deploy them into society. Whereas I guess historically, some of the roles of lawyers have been to actually, after contracts have been created, to perhaps when they're challenged, to actually even alter contracts or engage in negotiation around contracts. How do you see the standard legal profession interacting with the smart contract profession? Are there sort of battles between those? Are there sort of difference in legal sort of philosophy between those two schools? Am I making sense?
No, it's an interesting question, because I think that this isn't just about smart contracts. And a lot of the discussions we have, what we're doing is we're comparing legacy systems, established legacy systems, against what could potentially work in the future. And then you're trying to understand how they would interact and what the outcome would be. I think that when people approach smart contracts and the ability to vary a contract, sometimes it's considered that that is a bad thing. And people forget that contracts are a representation of a commercial relationship between humans, usually, or entities run by humans. And humans are inevitably prone to varying things and needing flexibility, and sometimes the ability to vary or change or kind of have some form of flexibility in a contract is actually a good thing, not a bad thing. So I don't think it's a constructive conversation to say how are they at odds, I think it's a better approach to say what are the principles that both are trying to achieve, you know? And I think that a contract is trying to achieve clarity and transparency of what the meeting of the minds were between parties. And if a smart contract can provide a way for people to ensure that there is clarity and that those commercial terms can be carried out in the way that they were intended, then there's no conflict there. What you actually have is a synergy between the two. And I even see that with some of the stuff I've heard today about financial inclusion and mobile money. I'm hearing words like integrity, trust, transparency. And I think if you look at that, if you take a negative approach to anti-money laundering laws or how they're being implemented, you can say that yes, it's certainly, I mean, from looking at it, it certainly does seem that in a lot of cases they're being counterproductive. But if you try and look at what the policy goals are and you see some synergy between that and what people are trying to achieve when they talk about financial inclusion, then you open yourself up to conversations that, you know, Constance and Primavera are looking at reputation identity systems. And you start to look at, well, what does that mean? And how can that play in the real world? Well, in the real world, the concept of government-backed identity may not work if the government that's asking to see the identity doesn't trust the government that's issued the identity. What other kind of identity system can you have? It does a reputation identity system that's based on the verification of an entity that does have trust. Is that something that could play in the real world? So I guess one of the things I advocate is looking at policies and reasons behind why people are trying to do things. And if you can find synergy, then you can use the law to actually facilitate achieving those aims.
Thank you. Fine. Our last speaker is Dan Hassan. Dan is the lead engineer at RobinHood Minor Asset Management. And for those of you who don't know RobinHood, it's an activist hedge fund. Well, perhaps there's other ways of describing it, who is actively exploring blockchain technology. So over to you, Dan.
Thanks, Brett.
And full disclosure, I'm actually a member of RobinHood as well, so I might be biased.
Hello, can you hear me at the back? Great. I thought we'd enter into a Byzantine standoff where I'd wait. And anyway, my name's Dan Hassan. I'm an engineer with RobinHood Minor Asset Management Cooperative. Accurately, we're an investment cooperative that operates much like a hedge fund. Now, colloquially, we call ourselves an activist hedge fund. Now, why hedge fund? So we trade on the stock market for a profit, grouping people's money together in the hope of making a profit on the stock market. Why activist? Well, the fund is run by a group of artists, hackers, academics. There's very few financial experts within the organisation. Now, how does this tap into exclusion to inclusion in terms of financial? So, in terms of 99% to 1%, I guess we're talking about really the top end of the 99%. So, to be involved, you need to have a bank account. So, a lot of the conversations we've been having in the panel have been talking about the unbanked and a lot of money that's not currently within that system. So that's not quite the slice that we're looking at. And it's not really even exclusion that we're looking at typically, because part of the problem that we're here to try and solve is how do we realign or redistribute some of the inclusion in mechanisms such as austerity or financialization. So we're very involved in those processes. When we take out credit or a student loan or take out a mortgage, much of those funds end up on the stock market. And when stuff goes wrong and banks get bailed out, we participate in that and we're involved in it. But it's at the end where we're paying for it. And by we, I mean the general population as opposed to existing banking class, etc. typically called the 1%, but I'll stay away from that analogy. How do we do it? So we run a data mining algorithm which logs all activity happening on the stock exchange, and then we competency rank everyone who's doing something and forecast that into the future based on historical results. So when enough actors make a movement towards a particular stock who in the past have made money on that, we copy them. So this has been quite successful for a group of artists, activists, academics. In the past 3 years, we've had an average profitability of about 35%. So why a cooperative? So typically to set up a hedge fund, I will get onto the blockchain in a minute, bear with me. Typically to set up a hedge fund, you kind of need to be a financial expert and or already rich. To participate in an already existing hedge fund, you kind of need a lot of money. So by organizing as a cooperative, we kind of sidestep some of those restrictions. And this is going to be a theme that I'm going to keep coming back to, which is existing legacy systems don't quite fit the capacities of people in today's kind of distributed world. We have capacities beyond the roles pre-set out for us. So, as a cooperative of people, we group together our money. It's a little under $1 million at the moment, so it's tiny in the hedge fund world. You're small if you've got 500 million. So yeah, we found an access point where a group of people can come together and redistribute some of the inclusion or participation on the stock market instead of just bearing the brunt of austerity measures. And austerity is not, it's not a new thing. I guess in Europe it is kind of a new thing. We see austerity, but in other countries it might be called financial restructuring or something like that. So at the moment what I'm doing is essentially we accept bitcoins in exchange for shares. Shares are about 30 euros. So we're the cheapest hedge fund around. You need to pay membership of 30 euros and then a share is 30 euros. So the minimum that you need to spend is 60 euros. So we're at the cheap end of the market. And we've got open membership, so anyone can join. So that might sound a little bit odd. Why should you trust us? I'm not going to try and make you trust us, but one of the approaches that we're taking is to essentially, one way that you can trust us is essentially at the end of each financial year, Ernst & Young audit our accounts to say, the accounts are true representation of what's actually happened. And you guys can trust Ernst & Young, who are a big fish, to not ruin their reputation by being dishonest about the state of affairs. But we feel with blockchain technology, we can go a step further. We can resemble the entire inner workings of the cooperative on a blockchain so that it's globally auditable by anyone. That's quite a different tact to a lot of financial institutions such as hedge funds, to be radically transparent. But we see no reason why we shouldn't be. I should mention that to join the co-op, 60 euros. At the beginning point, we offer, if you share 50% of the proceeds with Commons expanding projects, we don't charge you for the service. If you want to keep 100% of the profits, we'll tax you 10% and then put that towards RobinHood projects. So where does that leave us? Well, I guess we're still in the old world. It's just slightly redistributed amongst a different set of people. But I guess the next stage of development for us is really looking at what does it mean to create new economic space. So a lot of the conversations that we've been having today have been about talking about maybe a disaggregation of existing legacy systems. So how can we do banking but slightly more efficient? In the past, we've had like banks and then PayPal and then cryptocurrencies have come along, but they're all dealing with similar stuff, maybe doing it in a more efficient, maybe pretty, a more frictionless way. But from our analysis, that's not really changing the heart of the matter. Like, how is it that we've got such disparity in wealth? What systems exist that allow that to perpetuate? And if by disaggregating some of these systems, are we not just kind of shifting around the people in a pre-existing, I don't want to use the word pyramid because that will have wrong connotations, but moving around within specific things without considering a change in the space itself. So we're going to have a talk tomorrow where we'll expand more into that new direction. I've had 5 minutes, so I'm going to bring it to a close.
Cool, thanks, Dan. I think we'll open it up for questions now. I guess the one thing I'm perhaps drawing out of this is a lot of the existing imagination around this concept of financial inclusion, or generally in international development around poverty reduction, is often based on increasing the efficiency of markets. So the markets don't work properly. Let's find a way to make them work properly. How do you get property right, et cetera, and a lot of the blockchain community has almost absorbed this by osmosis from the surrounding milieu, the sort of culture we live in. But there's an interesting question: is do blockchain systems actually allow us to move beyond those types of systems in some kind of way? Are there non-market-based uses of blockchain technology? Or are our imaginations constrained by the fact that we live in this market world constantly? So I guess that's an open question for everyone. And I will now open it up for questions. I think we only have about 15 or so minutes left. Is that right? Is that cool? Yeah, all right. Vinay, did I see you? Now you want to.
So I'd like to raise a question of passports and things like biometrics on blockchains for doing KYC AML. Does anybody have an opinion on that? Basically, what would it take to issue a passport instead of just a currency? If you're going to do property registers, why not do identity? And what goes on down that path?
In terms of, let me start with that. One of the going back to the analysis that sometimes the unintended consequence, one of the unintended consequences of regulation is creating an obstacle. I've been doing some research on all of these elements or paradigms that blockchain technology or Bitcoin are challenging, right? One is identity, big one is identity. Of course, trust, control, custody, security. The security paradigm is totally different in a blockchain type enforcement mechanism than not, an access control mechanism, for example. But in identity is one of the key issues. And to connect that question with the issue of inclusion, one of the findings is, or I think observations that is just common sense, is that identity is today the monopoly of government, right? So you have to be, in order to exist, you have to be certified to exist by government, if you think about it. So otherwise you're just human, but no one knows where you are, who you live, or who you belong to, right? Whose jurisdiction you belong to. So there is a connection between, and then analyzing the reasons why that is the case. And of course, it's the policy goals of deterring financial crime and ensuring fiscal, purposes, for, collecting taxes. So it's very important for the government that people be arrestable and assets be seizable. Those are the two reasons why, and if we're talking among friends here, right? So that's the reality of things. So the question is, in order, technically, it is possible to create alternative identification systems. There's a lot of research happening right now about that. So it's possible to create identities that are sovereign-less, or sovereignty-less, or nationality-less, So And it should probably be the reason. And one of the most fascinating projects that I've heard of is the ID3 research project, based on mustard seed. Actually, John Clippinger is here, and he's more conversant than anyone else in that kind of technology. And actually, Patrick Deegan, who was also a Necker, presented new identity systems in that conference. It's fascinating what could be done, and in the sense that it would satisfy both the policy goal of identifying people when necessary for law enforcement reasons, and also protecting privacy, through this layered zero knowledge approach of only accessing the layers that are required or necessary. So technically it's possible, but I think we have the obstacle that the paradigm today is government, unexpired, government-issued ID. So if you don't have these three elements, you cannot belong to the financial services world.
Can I ask a related question here quickly, because it potentially bears out in this. The area of blockchain voting has sort of been brought up as a potential solution in countries that have poor governance, as a potential way of increasing the transparency of votes. And this is like a tangible issue. We hear about this in the news a lot. Do any of you have anything particularly profound to say on this? Any concerns? Any quick?
I am excited, just as I was excited. I mean, you have to imagine where I come from. I'm from Argentina, so I've lived hyperinflation. When I was a sophomore in college, July of '89, milk in the morning was $2 and it was $6 in the afternoon. So, and that's one thing. So you understand the value of a non-inflationary currency, so that's what's so exciting. Then you understand the value of freedom. When someone tells you cannot buy a certain asset because the economy has to be protected, so there has to be capital flight protections, and there's a ban on acquiring foreign assets. That's happening in Argentina today. And the third one is democracy and civic representation. And that is something that is fascinating, and there is actually one of the things that also excited me when I saw this technology was about tamper-proof voting, the ability to execute a vote that cannot be challenged or can be proven to be the choice of a person. But it's also tied to identity, right? And the fact that how do you prove that this particular human, out of his own will, or her own will, pushed that button, executed that, and there's an identity and link to the choice of a vote
could you imagine that being applied in the context of Somaliland? On the blockchain voting system, so these technological, what would be the obstacles to such a thing?
Obviously blockchain can be used for anything, but I wanted to go back to the issue of, do you mind if I go back to the issue of having identity? Because the identity today is becoming much more complicated. People are asking for biometric IDs. Biometric IDs are very expensive. They want not only biometric IDs, but it has to be on a chip, on the back of your card. Those are very expensive to produce. It costs hundreds of millions in Nigeria to produce something like that, and it's not going anywhere. So why do you have to insist? Why do people have to insist on something like that? It should be much easier to have just like Social Security in the United States is a number. That's all it is. It's just a number that everybody agreed on. The government is managing it, and that number goes with you everywhere you go. So in Africa, we're now seeing situations where they're saying, to do voting or to do financial services or anything, you have to have this biometric ID, and you have to have it on a chip card. It's like, come on. Why does it have to be that way? Why can't you just have something as simple as everybody now today has a mobile phone number, and it is traceable, and it is, people know who it belongs to because they took their passport or ID or whatever. Why can't that be used as the number? And that number doesn't change. It stays with you forever. That's your telephone number, and that's your ID number. We have to get away from this paradigm of complicating things a lot more than we used to have in the past, just because we want digital technology and identity.
Can I make a further comment on that too, that I was thinking while you were asking that question, and that is, I think in the dialogue about blockchain technology, there's a heavy focus on its ability to verify and authenticate. I think that an equally as important dialogue to have or assessment to make is, in this situation, does it also have the ability to improve access, security and management of that? Because when I was listening to you talk, when you were talking about the challenges that the banking system has and the cash economy, it goes beyond just monetary policy or stability of banking. It's things like cash costs money to move around.
Oh, absolutely.
How do I get it from point A to point B?
Absolutely.
And there's one of the members of the Sydney Bitcoin community who he said that he sees blockchain technology a bit like the shipping container. In the olden days, in order to move goods and services in a ship, you had to load it bale by bale, sack by sack. And then someone went, why don't we create a metal box and we put everything inside, and now we can efficiently, securely move in that way with goods from point A to point B. In this perspective, if you draw that analogy to the blockchain, it can be data, and I'm not sitting here to have a technical discussion about how that can be done technically, but I'm just saying that when we think about financial inclusion or the blockchain or how it can make a difference, I think it's understanding the friction points and how the technology can assess those friction points, not looking at the technology first and then seeing how you can apply it. That's just my comment on that.
More burning questions? Ian, I see you got your hand up. Cool. Yeah.
Yes, I'm very glad that you challenged the notion that identity is a solution and not a problem. I'd also like to look at poverty and financial inclusion, and it strikes me, having been around in Kenya for a brief period of time and looked and so forth, understanding the problem space is very hard for us foreigners to achieve. But there is one thing that comes out very clearly, and that is every control you put in place is an opportunity for extortion. And we heard the story about trying to get some Afghanistan woman out of the country, and this became a journey through a whole bunch of controls. Now, each of those controls was then turned into, predictably, this is how this world works, into a point of extortion. The hand goes out and money exchanges hand. So what does the panel think blockchain technologies and cryptocurrencies in general are going to do in the face of extortion? Are we creating more controls, or are we finding ways around it? Do we have an answer here, or is it completely orthogonal?
Charlene, do you have any question? Any thoughts? Dan?
I'll bring it back to something that I know. I think it depends on how you use it and in what setting. So because what we're doing is quite queer, we've had set up as a cooperative. Cooperative law, we're incorporated in Helsinki, requires that to extract funds from the cooperative can take 12 to 18 months, sometimes shorter than that. And that is there to stop bad actors within a cooperative sandbagging value. However, members can directly trade amongst each other. So in this case, by using blockchain technologies in a globally auditable way, we can ease the ability of members who might not know each other within a known group to exchange shares amongst themselves to add liquidity to the system. So that's just one small example where actually you're decreasing barriers, but in a globally auditable way. I don't know how transferable that is to other systems, but I imagine it depends how you use it.
I think, sorry, go ahead.
Well, I was just going to say that one thing we've seen in Kenya is actually you can use the excuse, and Ian, you would know this because you know how often police officers try to pull you over in Nairobi. But I just thought of the scenario where you can say, I don't have any cash, but I could send you mobile money. And, police officers don't want M-Pesa. They don't want mobile money because that's traceable. So I do see that, functions like, or platforms or technologies like mobile money or Bitcoin, and that's a huge misnomer, is that people forget that there's a pseudo in front of the pseudo-anonymous, or a pseudo in front of anonymous. And so I think, not exactly just to extortion, but in terms of, people, critics of Bitcoin who say, oh, well, now this is facilitating money laundering and funding terrorist activities in unstable environments. I mean, the truth is that there is a traceability to cryptocurrency, and that's kind of the beauty of there being, a distributed ledger that is accessible by anyone. And that, okay, granted, I can't personally hunt down folks, because I'm not a cryptographic expert, but that there is a traceability. So, yeah, I think that's a really, really interesting statement about controls, but I think by digitizing money flows in general, there is a traceability that leads to accountability and transparency. So whether we're talking about, a bribe on the streets of Nairobi or, something to a bigger extent like funding terrorist activities, I think by digitizing flows, I think there is a transparency there. I mean, the truth is even cryptocurrency isn't going to stop bad things being done with cash, which is how most quote-unquote bad things are funded these days. So I think just the existence of cryptocurrency, what I focus on, and kind of going back to financial inclusion, is the beauty of cryptocurrency is allowing money value, monetary value, to flow across borders, in and out of countries, without the banking system, or even with the banking system. I didn't mention that, but BitPesa deposits money into bank accounts in Kenya too. But I'm just saying, I think that I try to focus on the positive aspect, which is about increasing money flows. And I think there is less opportunity for, cryptocurrency being used for quote-unquote bad things because it's traceable.
And we got only about 3 minutes left. So I just want to get this one last question in from this gentleman who I think has been waiting for a while. A quick question.
Great, thank you very much. I just discussed with Constance that I think we're at a time point now that a quick question can't be fitted in. It's going to be too long. But thank you for a fascinating discussion.
Well, perhaps you can discuss afterwards. I get the closing word. I guess the last thing I would say, it's been a very interesting discussion. One of the sort of the deeper questions we haven't really grappled with here is we pointed out a whole bunch of problems of governance in various countries. As Ian was saying, you create these potentials for extortion and so on. And the automatic impulse generally when faced with these governance issues is sometimes to seek an escape from governance. Find some kind of technological solution to get away from this problem. There's an equally valid alternative scenario, which is which is the normal democratic process of countries, is how do you just improve governance? This is the old-fashioned way of doing it. And I think the other thing we also need to be thinking about with these technological solutions is the question should be always what are the trade-offs involved?
Yes.
We get rid of cash. What happens then? What have you created now?
Yes.
And let's leave it at that.